Hello and welcome to the Trading Bell. I'm Norah and today we are talking matters finance. How do we leverage the institutions that we have in the country to provide the much needed finance in this country? Well, we have actually Kenya Development Corporation, which is very critical, and today we are talking to the Director General, Norah Ratemo, regards to the role of KDC. Secondly, how you can take advantage of this facility. And lastly, where this organization is going. Well, welcome to Trading Bell, Norah.
Thank you.
So, I mean, when we talk about KDC, because I remember back in the day we used to have different, development finance institutions, and later on we experienced a merger, and there emerged Kenya Development Corporation. Just to set ground rolling, what does KDC do?
So thank you, and it's good that you've gone back to the history of how KDC came about. So KDC is a successor of 3 developmental financial institutions. Now we'll go back to post-independence, and the government then sees how do we develop critical sectors so that they can spur the economic growth. And they looked at Kenya's strengths, and that was tourism. They looked at manufacturing, they looked at healthcare. And at that time, it was seen that they needed to form specific sector-driven developmental financial institution to offer subsidized facilities that are able to spur development within those sectors. So at that time is where institutions like ICDC were formed, Tourism Finance Corporation, then known as Kenya Tourism Development Corporation, and IDB were formed. These were in the 60s. And come 2020, they've caused, of course, their impact and their development. And there are a lot of investments that can be associated with those institutions, the likes of Hilton, Intercontinental, Mombasa Beach. We have investments like Qual that came about. Centum was actually a subsidiary of ICDC, and you see it's grown and even outgrown now to become bigger. A big investment vehicle. So come 2020, the government sees that all these 3 institutions are actually doing the same role, and they would be able to leverage on a bigger balance sheet by being brought together. And that way, the 3 institutions were merged to now form Kenya Development Corporation, which is more or less playing a catalytic role by providing development finance and concessional loans to investments in Kenya to spur development. Okay. So we de-risk investments.
Okay.
Yes.
And that's very critical, especially looking at the environment that we're operating right now. First of all, the government seems to be very intentional regards to reviving some of those historic sectors that you're talking about when we had those developmental financial institutions just post-independence, the tourism sector, manufacturing sector. I mean, as a country right now, as we speak, we are net importers.
Yes.
And that should be a concern, at the same time, a challenge to institutions like KDC. What are we doing to turn that around?
So KDC is actually playing a very critical role in terms of that, because in fact we currently fall under the Ministry of Investments, Trade and Industry. Now, one of the targets and visions of Kenya Kwanza is actually to increase exports and manufacturing and contribution by manufacturing from the current 7% to 15% and 20% by 30. That is what we're calling 20 by 30. And so KDC is in the center of all this by providing and supporting this critical sector. So our sectors of focus are actually in manufacturing, post-harvest management, agri-processing. So we provide financing through various products to those specific sectors, We equally have credit lines, because part of what we do is also try and resource mobilize and bring in affordable financing to be able to support these sectors. So currently we have credit lines like the Indian credit line, which supports import of Indian equipment to Kenya to help with this manufacturing, and we're very key and focused in supporting industries that are keen also on exporting, and that is how now we play a role also with our other parastatals like Keproba, that will then support these manufacturers to market their products outside Kenya and thereby increasing our exports.
All right. And I was checking out the types of interventions in terms of finance that KDC offers. Issues to do with project finance, working capital, asset finance, which is critical, especially when you talk about MSMEs. And we'll go deeper into the MSME world. But so far, how does the marketplace engage with KDC? Is there a particular standard operating procedure when it comes to engagement and how they can take advantage of some of these products?
I think we are out there. Having changed and rebranded ourselves to Kenya Development Corporation has not lost who we are in our accessibility. So the products are actually on our website. Clients are able to download. We actually have a portal. We've gone ahead to put our services on eCitizen, so you can do your applications. We equally participate in a lot of forums. We are partners with Kenya National Chamber of Commerce, participate a lot in their events. So equally, you can just walk into our offices and be able to access this. What we are currently also trying to do is, of course, you've seen our Minister for Trade and Investments has been quite vocal and pushing the development of county aggregation parks. So what KDC is going to eventually do is see how we are stationed in these respective county aggregation parks so that we're able to be with the investors, provide our solutions on the ground. So we will also be accessible in the 47 counties. That's a long-term plan that we have, so that we are accessible and our products are also accessible to the actual MSMEs within those spaces.
All right. I'm thinking about incentives, because it's not just a Kenyan thing. We always have to lure people, even when something is very, positive for that particular individual or that particular business. In regards to KDC and engagement with the marketplace, are there certain incentives that should a businessman be watching this will be like, okay, because of that, let me go explore and dig deeper how I can take advantage of some of these interventions that Kenya Development Corporation offers?
All right, so I think let's go back to what is the role of a developmental financial institution, so that you see where in the space we play in. So developmental financial institutions provide long-term capital. We provide what is called patient capital. So in terms of a business, where you start a business and the only person who can invest in your business is probably your mother, who can be able to provide capital into that business. Then probably that business takes off to a point you're still not yet attractive to private sector funding, that is money from banks, the commercial funding, but the business is at a point where probably you'll need what we call angel investors, and that is how you see people going and rallying up and raising capital within that space. Your business then grows, and it's still not at a point where it's still not ready, investor ready, to make commercial sense. Now that is where KDC or developmental financial institutions come, because we provide that patient capital for your business now to de-risk your business, to then be attractive, to make commercial sense. So we are very specific or keen on the kind of investments that we do, because ours is basically to de-risk your investment, and once your investment is at a level where now you can afford and you can attract private sector funding, you can attract a commercial facility. We then now go ahead and support other businesses. So we do this through various instruments, and that is either debt or equity. So for equity is where we take stake in your business and divest out of that business at some point when we now feel private sector can now invest in it. And that is now where you see at times IPOs are floated, government floats IPOs, or government sells its stake to a private sector person. We divest out because the business is mature enough. It's at a point where it makes business sense. So in the space we play, I think we are incentivized, or we incentivize businesses enough because we provide that long-term capital, which is up to a period of 10 years. Our interest rate is concessional. We take stake in businesses through equity investments. And doing this is to be able then, and I think you've had a lot where the president is actually focused on foreign direct investments coming in. So by us taking and investing and de-risking an investments, it's with the intention of attracting probably foreign investments coming in into the same business, and thereby by the time that this business now is mature enough, we then get out of it, allow private sector to run with it.
That's incredible. You've mentioned IPO, and it seems to be a term that is disappearing with time. I know a recent visit by the president at the Nairobi Securities Exchange, that was one of the conversations. How can we get our markets up?
Yeah.
It seems you guys are at the center of all that. I'm thinking, maybe from where you sit in terms of, because government is thinking of sort of privatizing some of the state entities. What will that do for our securities, which has been called, very thin and not too deep for investors?
Well, I think, Noah, that would actually revitalize and revive the browse, because where government is able then to float mature businesses, mature investments into the market and allow now the private sector to invest through an IPO. And so there are a lot of investments, and I think a pipeline of these investments has been put together. The entity that has been charged to actually carry out this is the Privatization Commission. So there are various models of actually divesting out of this, of which government is actually keen on seeing. One of the methods of divesting out of these investments is actually through the IPO. And I think we're in the process of that. As KDC, we've identified various investments that we feel are mature enough. It is actually ripe for us to actually exit out of them. And once we've exited, the method of actually, and proposed methods of exit, IPO is one of them.
Okay.
Yes.
Oh, that's incredible. Recently I saw you're looking close to 5.2 billion, or is it 52 billion? Because you're saying there is a huge demand. We have a financing gap.
Yes.
When you talk about the Kenya ecosystem. And you're talking about foreign direct investment, and we've seen the externalities factors, raising of rates in the states, capital's outflow happening. How do you counter such moves, especially when a phenomenon is global and is leading to exit of some of these investments?
I think what currently is happening with the economy is also what incentives and what interventions is government actually giving to retain some of these investments, but equally it's to present those investment opportunities. I think the goal of government right now is to increase foreign direct investments from the current $500 million to about $10 billion by the end of this year. And by that, and how to do that, is actually having bankable opportunities that then attract these investments into Kenya. And remember, by attracting foreign direct investments, what that does to our economy, and what we are seeing actually with the shilling struggling, with the demand of dollars, actually that sorts all that out, because we bring in our foreign exchange into the into the economy. We are creating jobs, we are enhancing manufacturing, we are bringing in technology. So I think KDC and what we are actually doing is actually helping investors, because part of our role, besides providing financing, is also providing business advisory services. Okay. And business advisory services would also be packaging these opportunities, making them bankable, assisting investors in carrying out feasibility studies, and then probably assisting them also resource mobilize. I think our government has actually been very vocal in terms of they are ready, Kenya is ready for investments.
Okay. Recently, we saw, Kenya host the inaugural Africa Climate Summit, and I did a story around people coming with guzzlers at the Africa Climate Summit. But that notwithstanding, I'm thinking about, because they're talking about the financing gap, especially for green investments. Talk to me about that as a frontier sector that the Kenyan market can take advantage of.
Well, as it is in the discussions that were taking place, Africa, I think, is currently only contributing about 4% to the carbon emissions. And so the discussions were about then how do we also reduce that and would allow it, because much as we are contributing less to the carbon emissions, we are feeling the major effect of it as Africa, as a continent. So what it is that we then need to transform our businesses. We then need to look at how we carry out our investments so that we are climate friendly. And KDC is at the center of this. What we're looking at is creating a green investment fund. We're in the process of doing that, creating a green funding so that we are greening, especially manufacturing businesses, so that we reduce the carbon emissions. And I believe the challenge that was put out there was for multinational agencies and developmental financial institutions like us to take lead in this, provide this kind of financing so that we see a lot of businesses coming up. So KDC has some products already along that line. Besides the Green Fund, we're in the process of developing, and this we're working together with the World Bank. We also currently provide renewable energy financing so that we encourage, and remember our loans are actually concessional.
All right. So Norah, before I let you go, you're confirmed just recently. It's been just over 2 months, going to 3 months. You've worked in this organization, and I'm really keen to know, where are you taking KDC? What is your vision for your tenure as a DG for KDC?
No, thank you for that. Well, this is a critical institution for government and key in terms of transforming the economic agenda for this government. Now, one of my priorities would be to, first of all, cause an intervention within the respective identified value chains. So government has looked at how to transform this economy, and this has been well done, well researched, and identified priority value chains, identified that the beta model is actually what is going to work and be able to transform the economy. Now, KDC would be at the center of this by being able to provide financing. Now, ours is to cause intervention within these respective sectors, within these respective value chains. Mine would be then to see how to be able, one, to resource mobilize, raise affordable financing to then de-risk some of the investments within this. Within that space. Two, it would also be to unlock our tied up capital. Remember, KDC has heavily invested in prior years. So we have capital that is, or investments that are now mature and ripe. And as we discussed earlier, some of the ways we'd be looking at would also be as we revive the NSE through probably floating an IPO as we divest out of this investment. Key in the agenda of this government also would be then to transform this institution into a sovereign wealth fund. That it's the investment vehicle of government, that as investments are happening, Kenya and KDC is in the front of actually investing and taking lead in terms of, we have at times excess funds as a country, not really excess funds because I know we have a budget deficit, but using part of our resources, say the pension funds that we have, identifying alternative investments that then would, of course, be able to give us, as a country, great returns. So my agenda for this institution would be, of course, to transform it to be that investment vehicle, a sovereign wealth fund.
All right.
Thank you.
Thank you very much. Norah Ratemo, Director General, Kenya Development Corporation. She's listed a vision and we can hold her accountable, but at the same time, the role of KDC is to make sure that we are turning around our sectors and hopefully, especially the manufacturing bit, so that we turn, when it comes to balance of trade, let us start exporting and being self-sustainable. But that's the latest from the KDC corner. My name is Noah Kipkemboy. I leave you with the market.